distinguishing feature between 2 column and 3 column cash book is A, we have discount column, B, we have cash column, C, we have a bank column, and D, we have ledger folio. 11 says, which of the following is a real account? We have A, plant account, B, salary account, creditors account, D, trading account. Then question 12 says, which of the following has a credit balance? We have capital, cash, drawing, debit. So then the question number 13 says, net turnover is referred to as purchases, A, B, assets, C, sales, D, profit. We have number 14, which says purchase account is overcast by 200 while wages account is undercast by 200. This is A, an error of omission, B, a compensating error, C, an error of commission, D, an error of principle. 15th question says, if statement showing a trader's financial position as at a particular date is A or an A, trading account, B, profit and loss account, C, balance sheet, D, appropriation account. 16th question says, which of the following items is found in the sales ledger control account? A, we have discount received, B, we have total credit purchase, C, discount allowed, D, return outward. The number 17 question says, the process of using sales ledger's balance to cancel off purchase but ledger balance is A, balancing, C, set off, C, reconciliation, D, cancelling. Then 18 says an example of self-balancing account is the A, suspense account, B, we have creditors account, C, we have control account, and D, we have debtors account. 19th question says an advantage of control account is A, adding figure, B, locating figures, C, changing figures, D, locating errors. Last question but not the least says the balance of sales ledger control accounts represent A, total sales, B, total credit sales, C, total creditor, and D, we have total debtors. So above all these questions that was listed above, they also have answers to them, and the answers will be taking the first one, which is first question. The answer is B. The reason why it is B, going to the question, is that as we have been told that when a company is going on a perpetual treaty, I mean the concept that enjoins that or assure the company to move without cutting the line of business, which is a going concern. So that is that's about. So a company is expected not to cut any service or not to stop in the course of their business. So it is a going concern that binds that. Then the second one, the answer is we have a business entity. You know, as explained it in the topics, that anything that has to do with entity is when a person having in economic interest in a particular business is separate from the business on its own. So the business becomes a corporate entity on its own. So the concept that guides us is a business entity. Likewise, we have the third question. The answer is C. We all know that principles of double entry is for every debit entry there must be corresponding credit entry. So that is that, and that is what guides an accountant, and that you can call it duality concept, whereby an account must have a twofold account. So that means when you have the debit side, it must definitely have a credit side. So the answer is C. Question 4. The answer is B, prudency concept. Going back to the question says the concept that says business should not lay claim to any profit before it is earned, and it is the kind of concept that it ensures that the account must be careful when they are realizing profit, and they must make necessary provisions for profit and loss as at when due, when it is certainty. So it is that is a prudency concept. Then the next question we have B. You know, I told you there before that when good is purchased in cash, it has two accounts is involved, and the first account is you prepare your cash account, and on the side of the cash account you have payment and receipt side. When you purchase, it must be on the payment side. So cash account has to be credited, while you prepare purchase account on its own, and purchase account is an expenses, so it has to be debited. So that's why you debit purchase account and credit cash account. That's at the ledger. That's at the entries and ledgers that it attached to that, because I told you the other time that any goods any transaction that was made in cash, the first thing you first recognize is cash account. Then you prepare that item, the items account on its own. In doing this, you are applying a double entry principle. And this question says, question 6, the answer is A, that have been recorded in the cash book but not by the bank. And you know, we've talked about the bank reconciliation. There are some items that can easily emerge when information is not getting to the holder of the cash book. And we've talked about unpresented check, that it is when a check has been presented, given to the customer, and the customer has not presented it in the bank. You must have recorded it in the cash book, but the bank has not. It has not been presented to bank. So answer is A. 7 question said, the answer for it is A. Petty cashier pay all expenses. It is not paid to the account, because you know there is an officer that is in charge of it, and we call them petty cashier, who covers any expenses. And you know, we talk about petty cash book, that it is a cash book that they used to run small expenses, to disburse small expense. So it is the petty cashier that pays all the expenses. Then question 8, the answer for question 8 is D. We have acquisition of fixed asset, and that is going back to the question, which of the following is entered in the general journal. General journal, you know, we have a general journal and a special journal. The special journal is meant for special account, while general journal can fit into any fixed asset or any other account. So it is a acquisition of fixed asset. The next question is A. That means it's talk about the cash receipt and payment involving discount. You know, I categorize it for you, that the single column, how you can identify this type of cash book. Like 3 columns, it must include, what must include is cash bank and the discount receipt and discount allowed on the other side. But 2 columns, we only have a cash book, cash and the bank column, while a single column we only have amount. So what is involved in that differentiates 3 column cash book from other cash book is discount. So the answer is A. Then 10 is a discount column. Discount column, he said, what distinguishes 2 column and 3 column cash book is, you know, they have cash column, the 2 have cash column, and the 2 also have bank column, and they have a ledger folio columns on their side. So what distinguishes them is the discount column, because 2 columns does not have discount column, while 3 column has discount column. Then 11 questions say, which of the following account is a real account? You know, we talk about classification of account, where we have personal and impersonal account. And under the personal account, we have a real account and nominal account. Real account are tangible or tangible or intangible asset. So now, real account is account that you can see. So given in the option, we have plant account, sales account, creditors account, and trading account. So plant account is categorized under the real account. So the answer for 11 is A, option A. Then 12. We're going to 12. Which of the following has a credit balance? You know, I gave you some hints and techniques when you are balancing your trial balance, the tactics to know which one will be on the debit side and on the credit side. And I think you will take note of it. So any, like cash now, cash is supposed to be in the debit side, drawings must be in the debit side, while premises is also an asset, so it has to be on the debit side. So the only items that will be supposed to be in the credit side here is the capital, because capital is a liability. So the answer for that question A, question 12 is A. Then 13, net turnover is referred to as, the answer is C, which is sales. Now I told you the other time that turnover, another name for turnover is sales. Now accounting has different terms that it stands for any item, so they might call them the name or another name wherein. So now the turnover can also be named sales. So the answer for number 13 is C, which is sales. Then the number 14 question says, purchase account is overcasted by 200, while wages account is undercasted by 200. You know, we talk about trial balance that affects items, error that affects trial balance, and those that does not affect trial balance. Here the answer is B, which is a compensating error. When an account is overcasted or it is undercasted, it falls under the compensating error. So the answer for number 14 is D. The 15 says the statement showing the trader financial position as at a particular date. You know, I told you the other time that another name used for balance sheet is financial position or statement to show the affairs. It is just a picture you know the asset and liability of the business at the end of the day. So the answer for 15 is option C, which is the balance sheet. It's another name for balance sheet is the financial position. So then number 16. Which of the following item is found in sales ledger control account? And I think we talk about the control account, which has the sales and purchase. We have the creditors and debitors account, where each side has the items that belongs to other side. Now, discount received, total creditor, discount allowed, which inform items belongs to sales ledger, and that is discount allowed. It is on the credit side of the sales ledger control account. So the answer for number 16 is C. 17, the process of using sales ledger balance to cancel off purchase ledger balance is A, balancing, B, set off, C, reconciliation, and the D, cancelling. Then, you know, I told you we talked about the contra. That means it's also another name for it is set off. So the answer for 17 is B, which is set off. So set off is what cancels sales ledger and the purchase ledger at the end of the day. You can also call it a contra. So B is the answer. The next one, which is question 18, an example of self-balancing account is the, I think I talked about control account, and which comprises two accounts, which is debtors account and creditors account. So another name you can call self-balancing. It is in your note. What we discussed it in the topic that we done earlier on. The another name for self-balancing is what we call control account. So the answer is C. And number 19 said an advantage of control account. I think we list some advantage of control account, and one of it in this option is locating error. That is another. The reason why we use control account is to locate error. So the answer for it is option D. Then the last but not the least question, balance of sales ledger control account represent. You see, in the sales ledger control account, you know we have opening balance. We have in the debit side of the sales ledger control account, we have sales ledger, we have the opening balance on the debit side, we have credit sales, we have so many things, and on the credit side we have a returning word, we have discount allowed, we have cash received from customer, and the check received from customer. Now at the end of the day, you discover that you must arrive at the difference between them will give you balance CD, which is the closing balance at the end of the day. So it can be called total debtor, because the balance at the end of the day shows the total amount that the customer is owing at the end of the day. Question 20, answer is D, option D, which is the total debtors. So that is that about the question and the answer.